So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha. Welcome back to The Daily Call. Today we're going to be talking about how to adjust short straddle option strategies. So short straddles are probably one of our favorite strategies here, whether we do them regular, I guess, or naked short straddles, or we do them synthetically with iron butterflies, because sometimes we will sell a short straddle and then buy protective wings because they're really cheap. They're in low implied volatility and basically create an iron butterfly. But a lot of people have confusion on how you should adjust these strategies, or I guess there's a lot of confusion on how you should go about adjusting these strategies. Now, the first thing you have to understand is that with these strategies, whether you do them as a regular straddle or as an iron butterfly, is that because you're selling at the money strikes, your first style of adjustment is going to be to go inverted, right? So we're not talking about rolling contracts to the next month. We're talking about simply making an adjustment in the existing month that you're trading. And because you're already starting with at the money strikes on both sides, you have no wiggle room to adjust these strikes and make them less at the money, or make them more narrow without going inverted. So the inversion process then is what I think trips everyone up. And inversion is actually really, really easy to understand if you just take a second to slow down and think through the process. So let's assume that we have a stock that's trading at $50. We sell the 50 strike straddle, so the 50 call, the 50 put, and let's say we take in a credit of $5. So that means that our break-even point is $5 above and $5 below our strike price. So we're looking for the stock to trade in a range of about $10 in either direction, right? So up or down by $5, $10 range. Well, because we've taken in a credit of $5, we now have a little bit of wiggle room to make an adjustment where we go inverted on the short straddle by a width that is less than the credit that we took in. So again, I'll say it slower. I just want to make sure I get it right too. Because we took in a credit of $5, we now have the ability to invert the position by $5 or less, okay? Now that's not assuming any additional credits that we take in. So if by inverting, we take in another $1 of credit, we have $6 in total credit. Now we can invert the position by $6, okay? So it's all based on the credit that you take in. But now let's say that the stock starts to go against you to the call side. So the stock starts to run up, right? It was trading at $50. Now it starts to go up, and now the stock is trading at, say, $55. It doesn't really matter, but it's trading high enough that you want to make an adjustment. So to adjust these short straddles, all you would do is roll up your unchallenged side, or the untested side, by rolling up your short put and selling an option contract a little bit higher. So in this case, if we originally sold the 50 strike puts, we might sell the 52 strike put options. We might roll it a little bit up higher and take in a bigger credit. Now, in this case, we have now gone inverted by $2. We have a short call at 50 and we have a short put at 52. And that $2 inversion is still okay. We still are leaving room to make money because we took in a credit that was more than the width of the inversion. So the inversion is $2. The credit that we initially took in before the adjustment was $5. So even if the stock didn't go where we thought it was going to go and came back into the range, it still would leave us with about a $3 plus profit, okay? So again, the key with adjusting short straddles, not to really belabor this too much longer in the daily call, is just to pay attention to the width of the spreads when you go inverted and the total credit that you took in. You'll always want to try to make sure that you collect a total credit that is worth more than the width of the inversion. And again, always adjust by moving the unchallenged side of the position higher or lower, depending on where the stock goes. As always, hopefully you guys enjoy this. If you have any other questions, let us know. We do have some additional training inside of the platform on adjustments and going through this process. So if you want to watch me walk through it on a video tutorial, just search Straddle Adjustments inside of the Option Alpha platform. Until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to play smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.